now we have a panel on the next wave in tokenization of capital markets. We have four very well-informed people to talk to about this. We have Jeff Stewart, who's the Managing Director of GPO Fund. We have Nick Cowan, the Managing Director and Founder of the Gibraltar Stock Exchange. Marcus Killick, the Chief Executive Officer of Isolus. Talal Tabar, the Business Development Lead for Gibraltar Network. Could you please welcome them to the stage?
Jeff, where do you want to?
Oh, right here. Right.
And keep in mind, we will have time for audience questions after this one, so be thinking about those, and if you have a question towards the end, just put your hand up and I'll come bring you a microphone.
Don't kick it. Great. So welcome. So the topic is about the tokenization of capital markets. We're going to talk about how we see the existing tokenized market and the traditional capital markets merge in the coming months. And what we're going to do first is let everyone introduce themselves, so give some context on our opinion. And then we're going to talk a little bit about what we're seeing, and then we're going to dig into some questions that I have, and then we're going to open it up to questions for the group. So would you like to go first?
Yeah, I'm Nick Cowan. Some of you may have heard from me earlier. I'm the MD of the Gibraltar Stock Exchange and now the Gibraltar Blockchain Exchange as well.
Hi, my name is Marcus Killick. As has been announced, I'm Chief Executive Officer of Isolus, which is one of the law firms here. I also am Chairman of Nick's board on GSX, and I sit
He's my boss.
I'd like to think. And I'm also a non-executive director of the Gibraltar International Bank, which, as was mentioned by Jerry Garcia earlier, is one of the banks that has actually entered into the space of working with ICOs and providing banking services for them.
Great. My name is Talal Tabar. I'm the co-founder of the Gibraltar Network.
I'm not sure if, yeah, I thought it was loud enough. So basically we're doing a blockchain platform for the tokenization of traditional assets. So when I say traditional asset, that's currencies, money market instruments, commodities, equities, and futures. And I think tokenization of equities falls hand in hand with what Gibraltar Blockchain Exchange is trying to do. It's definitely the way forward. I used to work at PricewaterhouseCoopers and then quit about a year ago to develop Gibraltar Network, and excited to be here.
Great. So I thought it might be, I'll introduce myself in a moment, but I thought it might be helpful to talk a little bit, put a little context around this. We're in the crypto community, we're really proud that there's been about $3 billion of issuance in the last 365 days. And there's been massive growth. And we talk to our friends in the crypto community and they say, well, why are you talking about traditional markets? Who cares? It's all going to be crypto. So I thought, how can I put this in perspective? And did a little research, and I figured most of you are familiar with Gibraltar. And if we look at the size of Gibraltar, and we said that's about the size of the current crypto asset class, the traditional asset class, if you include private equity, which is about $2 trillion, or marketable securities, which is about $100 trillion, it would be bigger than England. So just to put it in perspective, the rapidly growing crypto tokenization market is a little pimple on the global capital markets. But I think it is the opinion of the group here that that's about to change, and that's what we're going to talk about. First, a little context on myself and what we're doing at the Global Public Offering Fund. We got into this because we found that the U.S. capital markets is broken. We got very interested in equities back in the days when companies like Oracle, like Intel, like Cisco, like NVIDIA, which is now a $70 billion company, could go public. Today, those companies would be deemed too small if they tried to go public today, the size that they went when they went public. So the U.S. capital markets is essentially broken for capital formation and helping growth companies grow. So we're very excited about the decentralization of capital markets and the opportunity that presents. Just to put it in perspective, in the US, there used to be hundreds of companies that went public and raised less than $50 million. Today, you need to be a $2 or $3 billion company to go public. In fact, last year there was less than 20 venture-backed technology companies that went public. While at the same time, there's all these incubators, there's online training, there's a renaissance of entrepreneurship. The cost to start a company has, and to technology enable a company has dropped, but yet the public markets in the US is broken. And that's been partially because of decimalization, partly because of well-intended but very strict regulatory environment. And in the US, there's a high litigation cost and expense associated with being public. So what we've been exploring is this idea of going public globally. And we think back to the days when you went to a bookstore to get a book, and you didn't think, you thought your bookstore was at the end of the street. That's kind of where people are with the capital markets today. They say, oh, well, my stock exchange, my closest stock exchange is in London. I'll go to London to buy my stock. But you don't think that way when you buy books, or at least in most of the world. You think, well, the server happens to be in Silicon Valley, and the payment gateway happens to be in Europe, and the company happens to be based up in Seattle, and the distribution warehouse happens to be in Barcelona. It happens in the cloud, and that's how we at the Global Public Offering Fund think the capital markets are going to evolve. And what we've been doing is building a pipeline of companies that we think can be substantially more valuable, implementing a strategy of being public globally, essentially being public everywhere in the world except for the US, where the IPO market is broken. So with that context, I figured we'd just go through and maybe spend 2 or 3 minutes about where you see the capital markets going over the next 5 years. And I would say feel free to talk about less than 5 years because things are moving very, very fast, but just your thought on timing also would be interesting.
It's an interesting slide, the one before with the chart that was up there. I used to be the global head of equities at a large investment bank, and I also ran the equity capital markets division. And it was an incredibly onerous process, as you know, to bring something to market. We were in the .com era as well. We had a large American outfit, and what we found was that as regulations caught up and disclosure caught up, the speed to market basically slowed. And I think, look, why are we here? Post 08, I think a lot of things have changed. And I think what we're seeing right now, I talked about opportunity this morning. I think what we're seeing right now is digital crowdfunding basically becoming mainstream. And I think that comes from 2 perspectives. I think from the investor side, it seems to be going from crowdfunding to accredited investors. And from the issuer side, it's going from 2 or 3 guys in a garage to actually, I think you're going to see mainstream corporates looking at this space. So I think in terms of where do we see the markets going, I think there's a couple of things. I mean, we've obviously talked specifically about our business model, but I actually see the acceleration in terms of speed to market and cost cutting being transformed. And that could present challenges for some of the investment banks. But I believe that you could quite easily see speed to market in terms of your traditional corporates doing an IPO as tokenized securities really happen within 5 years. I actually see them happening very, very quickly. We talk about the end game. The end game is that you should be able to buy IBM on a Sunday morning on your iPhone. That's where I see things happening really quite quickly with instantaneous settlement and clearing and transfer of ownership. So I think in terms of the capital markets, I do believe that this DLT framework that we are being able to adapt will completely transform the way companies come to market and most importantly the cost. If you look at the market in the UK right now, AIM, which is a subsidiary of the London Stock Exchange, they talk about sort of 10%, 5 to 10% is the cost of capital from what you raise. Those numbers, I believe, are unacceptable. So I think there's a huge opportunity here for let's look at the life cycle of a company. First of all, you go to VC, right? That tends to be the form. VC, then private equity. Then you might try to go maybe sell a piece to the market, and you go on this journey, which is probably 10 years from initial raising of capital right through to IPO. And what the ICO, or initial token sale market, has been able to transform is that access to capital. And I think what we'll see now over the next 2-3 years is a maturing of that market. And whether that's a maturity in terms of regulations, a maturity in terms of investors, access to different product ranges, I see that it's going to be transformational in terms of costs.
Great.
Okay, I think we all agree so far that the current system is broken. I'm a believer in capitalism. I love the fact that ICOs, ITOs are the petri dish of the capitalism of the future. When I see that even in the current system, Saudi Aramco, which is trying to raise $1 trillion on the London Stock Exchange, the London Stock Exchange is kind of tweaking its rules with the help of the regulator in order to facilitate this. Doesn't indicate the system's working perfectly. Since 2008, and we saw the banks extract themselves from the market, therefore denying entrepreneurs an access to loan capital. You have venture capitalists and private equity, lovely people though they are, may not be the people you want to get into bed with if you want to maintain control of your company. You see other things that worked in the past, from 1993 until the present day. 26,000 companies in the UK have been helped to a tune of £16 billion by an enterprise initiative scheme run by the government. The government is now looking in the budget coming up to remove some of those advantages. Yet we have capitalism thriving. The life in blood in it will come out, but it is being denied the oxygen that that blood needs, it's being denied the capital that it needs, and the freedom to use that capital. So what has happened? This really odd thing has suddenly appeared. I don't think anyone in this room 12, 21 months ago would have dreamed to be being in Gibraltar talking about ICOs in one of the largest ICO markets in the world, tiny Gibraltar. Why? Because capitalism wanted to live and grow. Entrepreneurs wanted the money they needed to create the IBMs, to create the Googles, to create all those things, and some to fail. And they were being denied it by the existing market. Now, ICOs have given that opportunity. Initial token sales have given that opportunity. Now, where I see this going is taking this, the raw capitalism, with all its faults. And I don't think any of us would say that the current market is perfect within this particular sphere. There are abuses. There are people who really shouldn't be engaged in this particular activity. There are people who are either incompetent or out-and-out fraudsters. So what we need to do is take the bits that were good from the old capitalist market, sensible regulations, the principles that Joey Garcia referred to earlier today, the principles that make the investors want to come to the market and trust the ITO market. We want to create that trust, so that once those initial investors, the true risk takers, the people that you are trying to attract today and in other conferences we've all been to, that they are gently replaced by the more risk-averse, more risk-managed investors who will have the bulk of the money that you need to grow your businesses. So we need to have a safe market in which to actually undertake our activities. So we take the very best from the current capital markets. We make sure we remove the worst outrages of market abuse. That when there is stabilization of an ITO, that it is told to the investors so they're aware of the risks that they can take. And after all, regulation is about stopping a sensible, reasonable person from being made a fool of. Let's keep to those bases. Now, if we take that, the good bits of the old system, with the dynamism that is being created in this room and around the world at the moment, then we have a fantastic growth. Because ultimately, what we are here to do is grow our respective economies, grow the global economy in a way that is not working currently. Now, I don't know how many of you would have chosen perhaps Donald Trump to be an advisor of your ICO. Show of hands. Well, you should have done, because the Dow has moved from 17,750 to 23,750 in the time since he was elected. And what has he done to help it? Absolutely nothing. perfect advisor. So you take that which shows that that market is broken. It's a promise of tax cuts which may or may not derive growth in the American economy. But it's an enormous increase, and therefore is a risk of being a bubble in itself. No more or less a bubble than we're seeing in the ITO market. But we take the best of what is there, which I don't think includes President Trump. We take the best of the old market, the drive of the new market. We create the liquidity that you don't get in venture capitalism and private equity funding, and you bring those together. And that's where I think the future is going to be, not in the next 5 years, but in the next 12 months.
12 months, okay.
All right, interesting, 12 months. I think Bill Gates used to say that we always overestimate the effect technology is going to have on the world in the coming 12 months, but we always underestimate how much it's going to have in the coming 3 years. So despite how optimistic everyone in this room is, I like to kind of bring things down to the ground. Basically, so blockchain-based stock exchange is an amazing idea, right? But there's some, let's say, characteristics of blockchains today for anyone that works day-to-day with blockchains that knows at the moment they're pretty slow. So high-frequency trading, which is currently very prevalent in markets, would not be possible on the blockchain. So like solutions maybe doing some on side chain, some doing off chain and then uploading them on chain could be figured out, but it's always important to understand the limitations of blockchains at the moment. The issue of it being public in some cases might be an issue for, let's say, investors who don't necessarily want their trades public. So let's say you have a trade that's already broadcasted on a public blockchain. Someone could copy that and just increase the gas price, or just increase the gas and have that transaction flow before that. So I think the safeguards for market manipulation are still not there. I'm actually very happy to have a panel that consists of someone from, let's say, traditional hardcore finance, someone as a regulator, legal, and someone from, let's say, the new upcoming field of crypto. The way that I see it happening is unless all four sides join forces, it's not going to work out. So NASDAQ actually tried to do the link application for blockchain technology, but that was kind of one-sided. You didn't have buy-in from all aspects, and that's why we haven't seen it scale as much as it should have. Oliver Wyman released a report saying that banks spend about $100 to $150 billion in IT on operational support for capital markets. Blockchain can definitely decrease that by make it just a fraction of that. But I think blockchain is more suited towards improving cost structures, fighting anti-money laundering, improving corruption. But in terms of creating value, I sometimes think that it's overestimated at some points. The ICO market today is, some people can consider it as a bubble, but I personally think that we're just scratching the tip of the iceberg. One very big difference between the ICO market today and the dot-com crash or the dot-com bubble is in the dot-com bubble, a lot of the information that was created by these new companies just died out. Whereas when you have a decentralized open source system, people can learn from the mistakes of the companies that failed and ICOs that failed, and that will only fuel the growth going forward. Another important thing that I think is missing in the industry today is the lack of safe traditional assets on the blockchain. So if you speak to a hardcore trader, he'd tell you that the volatility or the spread is just too much when it comes to cryptocurrencies. And I think doing asset-backed tokens or security-backed tokens is going to add a lot of much-needed stability to the market. Trying to bridge the gap between the traditional economy and the crypto economy is where most of the value is going to come. So I really applaud Gibraltar for doing not only a stock exchange, but trying to do a crypto exchange as well with the upcoming regulations.
Great. So I'm gonna ask about investor protections that can be enabled via smart contract and via consensus layer and things like oracles and time locks, and just the potential of this technology to solve problems that capitalism has seen over the last 100 years. But before I do that, I want to talk about one of our favorite topics, which is liquidity. There's a lot of liquidity right now in the ICO market, but there's relatively few issuances. You know, we've gone to hundreds, but not tens of thousands. As experts in the market, and experts in blockchain. What are some of the techniques that could be used, or some of the issues that may get solved or come up as what should be hundreds and then thousands of projects and companies move on to this type of financing or a hybrid financing around liquidity?
Yeah, I think, look, first of all, the governance is a major issue right now. I think governance is unclear. Obviously, we talked about what we were trying to do to change that. But I think in the ICO space right now, you have a lot of countries obviously taking time-out attitude. And that's created, I think, a number of issues. I think also, as the market matures, and it hasn't yet at all, the costs to market, and we're doing our own ICO, and I can tell you they're pretty high. You can have really quite a big pay away in terms of this space today, and I think that needs to become more commoditized. I think also if you, what I was saying this morning or this afternoon was, look, if you can create some traditional standards, or let's say consistent standards in terms of disclosure and transparency, etc. Standards in terms of continuing obligations, in terms of reporting, but then create a marketplace where you could have, let's say, 10 or 20 cryptocurrency exchanges. If they're in Gibraltar, all the better. But where you could be able to have let's say the ICO process become a lot faster in terms of commoditization, but also the secondary market becoming a lot more liquid. Because the problem is right now, as I see, the time to market is still quite slow. The recommended speed of an ICO from saying, I want to do this transaction is anything between 4 to 6 months, and that's probably being relatively aggressive. I would say the costs are anything between 8 and 20%, which is pretty high. And then once you bring your ICO to market, hopefully you do, and you get it away, you then got to try and find a cryptocurrency exchange to actually get the token listed on. Those steps, I think, they still need to grow and emerge and be resolved. And I think the problem is with regulatory uncertainty that's out there right now, you've got a lot of confusion.
So you're saying better standards and more regulatory certainty will increase the overall liquidity for this asset class?
Absolutely, because investors want protection. I think if you go back a year, Marcus was just saying, you go back a year, kind of the whole point of DLT was you didn't have to be regulated, right? That's kind of the whole space. It's disruptive, which is a really, really great thing until 90% of investors lose their shirts, because actually they've been subject to scams and frauds. And I think a lot of the issues that the ICO market faces, and that's why China have taken the action they've taken, is because there is just a lack of consistency, a lack of governance, a lack of standards, and anyone can crop up tomorrow and become an ICO advisor, and any company can effectively say, here's a white paper, I want to do a $100 million deal. And I think there's that consistency in terms of transparency that the market, I think, is crying out for. So yes, I believe that, I'm not saying there is going to be a global governance, but until the regulators catch up, until standards basically reach a point where investors feel a little bit more certainty, I think issuers feel a bit more certainty, I think the liquidity issue will still be a challenge.
Great. Marcus?
Investor protection is very dear to my heart. I spent 11 years heading up the regulator in Gibraltar. To me, you're going to get that liquidity with all the things that Nick says. But perhaps when we come to the third stage of the regulatory pathway that Gibraltar, and I'm sure others will go through. We had the first one you were talked to by Joey about the DLT. The rules are going to come out, the principles are going to come about ICO. The area I would like to see, and I know government is beginning to look at, is beginning to have crypto funds. That is, retail funds that will invest in the crypto market, or perhaps token-based or tokenized funds investing either into the real market or itself into the crypto market. That will bring the retail investor in, but the retail investor will have to be protected, or the very thing that Nick has warned about, which is having a flee from a market, because the retail investors scare easy and they come back slowly. But you're going to need them because they will be the foundation of your trust. Once they trust you, the politicians are going to trust you and the governments are going to trust you. But you're going to have a decent set of investor protection that is going to go along with those new crypto funds. And yes, smart contracts will be a key element of that, but you are not going to persuade the little old lady sat on the Glacis estate in Gibraltar anywhere about using what a smart contract is. You're not going to persuade her to use an Ether wallet. She's only going to be able to do it by going into the real world space in order to enter the crypto world space. And that requires trust, and with trust will come liquidity.
So I think what I'm going to say goes hand in hand in terms of technology that is disruptive usually is not disruptive in terms of consumer behavior. So Airbnb, Uber, they transform their industries without having the customer change the way that he interacts with the service. So I think transparency is definitely one of the most important things that's currently lacking in the industry. I think that the worst thing that governments could do is to try and push the technology away, because I don't necessarily agree that China banned ICOs or banned crypto before, back in 2013 for governance, but because a lot of money was leaving China that way, so the best thing that they could do was to stop it. In my eyes, that's the worst thing they could do, because today you will see the emergence of the world's best decentralized exchanges coming out of China. The reason for that being is when you try to stifle innovation, it will come back even stronger. So that's, I think, for me, one of the worst things governments could do is to try to stop the technology. In regards to liquidity, I think the way into crypto markets needs to be also improved. So a lot of Ether at the moment makes the majority of ICO fundraising, but the security of the crypto exchanges themselves haven't been up to par. So if you look at the Mt. Gox scandal, which was supposedly the biggest lesson on earth, when you had more than 700,000 Bitcoin in thin air, for me, I think exchanges need to have certain compliance, AML regulations in place, as well as, let's say, minimum liquidities, because they're more or less acting like banks, right? They're taking people's money and allowing them to buy cryptocurrency. So I think the regulations not only has to be there, or the safeguards, let's avoid the word regulations. Safeguards have to be there not only for the ICO market, but the way into the crypto market as well. But yeah, the whole market, everything that we're doing today, Bitcoin, Ether, ICOs, is just two Bill Gates, right? We're talking about $180 billion, not much more. So it's still a drop in the bucket when compared to traditional markets. And although, so there's the hype cycle, and I think now we're at the top of, let's say, the BS out of the industry. We'll see a drop during next year, but I think ICOs will come back stronger because it promotes, first of all, financial inclusion. Today you have, out of the 6-7 billion people in the world, over 50-60% don't have access to banks. What ICOs and cryptocurrencies can do is, regardless if you have a bank access or not, you can participate in these projects that will more or less shape the future.
Great. So I want to open it up to the audience for questions. So real fast on this next topic, but we've been exploring how smart contracts can help enforce some of the regulation, some of the governance that the companies themselves want. For example, in the US, your investors have to hold it for a year under certain regulatory schemes. You can actually enforce that through the contract. The startups that we've talked to are growing very fast, and they're concerned that once they're liquid, all of a sudden their competitors are going to be going to have access to proprietary information. Other people we've talked to love the idea that the smart contract can be actually a key to get access to what's going on in the company, and a way to control the flow of information and transfer restrictions from, in the U.S. The regulators and the companies really dislike when all of a sudden North Koreans are holding their securities. Or terrorists, that's on the no list too. So using smart contracts to help enforce this is something that we've heard some excitement about, and I just want to ask each one of you, of all the things that this new technology can do to help enforce a well-running market, which one most excites you?
Well, I think the most important thing is, I think, security. That's got to be the big driver, I think, in terms of priorities. But I think the points you've just raised, yeah, I mean, look, that's what you're doing is you're effectively taking traditional rules and embedding them in a smart contract to a degree. We've been talking to people over the last couple of weeks about our own token sale that I spoke about earlier. And we're thinking of doing exactly that, embedding vesting clauses in, for example, where the smart contract has a 5-year vest, 20% a year, for example, and I think that's a really good idea. And I think that's in many ways, the beauty of what's developing now, that you have that flexibility to potentially design things now, and if you have to change that, you just put some more gas in and reprogram the smart contract. So, but I think, yeah, there's some fantastic things. I think, I don't know how, once it goes secondary, how you would factor in, because our big challenge as an exchange, I'm talking about GBX, is you lay out the rules and you say, okay, you're a sponsor, you qualify, and you're an ICO, you look good. You go through the process, you go to market, and you effectively distribute the tokens and you list on GBX. After that, we really struggle to then control the process. We can't control where it goes from wallet A to wallet B. And that, I think, for us, for many of us, is the hardest thing, because you can only take things so far, but ultimately, you may well then be exposed to some of the things you spoke about in terms of North Korea or terrorism.
Okay. I think confidence is extremely important. Security, Nick is right. Last week, the exchange I used to convert vanished for 24 hours. You'd be amazed how fast you can press refresh. Now, that threw my confidence for a bit, and I do this stuff. So, can you imagine, again, once more and more people get involved, that sort of confidence or sudden loss of confidence, people don't like that, and they're unwilling to go back. So, security, absolutely. Smart contracts are great because they do what they say on the tin. There's a lovely one out there that will pay you instantly on a flight delay insurance. So that if it goes beyond the 2-hour delay, the insurance kicks in, it's in your bank account. No filling in forms. As you spoke about Uber and Airbnb. I use Uber. I'm one of the people who signed the petition in London. Why? Because it gave me an easier way to do something. A contract, such an insurance contract, that pays out and the money is in your account to buy the things you need when your flight is delayed. People are going to go to that. People will choose that because it's easier for them. So again, security, confidence, and I think simplicity and simplicity of use. And smart contracts are a major part of that.
Right. All right, so you asked about the most exciting thing. I'm going to say smart contracts, but I'm going to start with bashing them a bit. I think smart contracts today lack the dispute resolution mechanism, which is extremely important. So today there is no clear method of dispute resolution for smart contracts. The other thing that I think still needs to evolve is the level of complexity that smart contracts allow you to write today with, let's say, the limitations of the Solidity coding language will definitely have to be improved. So actually, I'm very happy Nick raised this issue of how to enforce it in secondary markets. Actually, the project that I'm working on tries to address this problem. Basically, we have the concept of governance without governments, where your role becomes more of an oversight role. So the way that we implement regulations these days is similar to how it was done in the Pharaoh days back in the day, where they wrote the regulations or rules on the papyrus paper, put them on the wall, and listen, guys, you have to follow this. The way that I see the future happening is you have the tokens become self-regulating themselves. So we've done a proof of concept for US Treasury bills and Islamic bonds, where basically the US T-bill, the tokenized US T-bill, follows real-world regulations without anyone having to micromanage that process. So that T-bill-backed token is an Ethereum-compatible token, so it's an ERC20 token and can sit in anyone's wallet, but you wouldn't be able to send it out unless you possess the necessary license to do so. So I think the way forward is where tokens follow real-world regulations without anyone having to do so. So what I'd love to do for GBX is trying to take a stab at getting the regulations, turning that into Solidity code, and proving how you can have the token follow real-world regulations without anyone having to micromanage it. So smart contracts, I think, is definitely the most interesting, but the one that needs most work as well. Great.
Do we have any questions?
Thank you. I have a question, and it's a little bit at a beginner, so I welcome your advice.
That'll be mine. I should answer that one then.
And first of all, I'd like to set aside DLT as an enabling technology. and focus it on the kind of the value token aspect. So I recently completed an IPO on the London Stock Exchange. I went through the process of doing it, and I've recently been looking at pre-ICO rounds. And when I compare the two, if I look at the regulatory difference, if I strip away all the regulatory mechanisms when I did the London Stock Exchange IPO, I can get quite close to an ICO, right? And so when I look at it, I kind of imagine that the ICO really is a highly unregulated system that has unlimited reach into retail investors through affiliate marketing. And if I allowed that on the London Stock Exchange, I would have no verification process, no prospectus, no restrictions on marketing, no restrictions on affiliate marketing, no restrictions on pre-IPO promotion, no minority rights for investors. So, and similar, you mentioned Airbnb, Uber. I signed the Uber petition, but a lot of Uber's economic model is subsidized by investors, and a lot of Uber and Airbnb takes advantage of social arbitrage and tax arbitrage as well. So I just wonder, even though I recognize this is a very exciting area in high growth, if I reconstructed those regulatory protections, I think I would get back to the same cost structure as traditional capital markets.
Yeah, well, I can share our view, which is we think it's going to be a hybrid market. We think that it is good to go public. You've increased financial flexibility, you've increased credibility, better transparency, and historically, companies used going public as part of their pathway to become multi-billion-dollar companies. So we're big fans of being public and the investors that the traditional markets have as part of your syndicate. So we see today, you go public, you list on your local exchange, and you have ADRs that trade on international exchanges. We think there's going to be a third class, which is essentially a tokenized equity, where a portion of your cap table is held in escrow and tokenized, and those tokens trade. And that opens up your shareholder base to include the hundreds of millions of people moving into the emerging market middle class who desperately need access to good products. It opens it up to people who want to know that they're holding it. They want the flexibility of holding it. They want the certainty of holding it, and the 24-hour nature associated with the tokenized offering. So we think what it does is it creates a more diverse capital market, and it's a more inclusive capital market, and it's not this or that. But that's kind of our view towards it. Do you want to?
Actually, I'd be quite interested to ask you back a question. The IPO process that you went through, how long did it take you from initiation through to actually?
About 6 months.
And that's pretty fast, actually. And in terms of roughly the percentage cost of capital, how did you find it? Without saying too.
So if I look at the all-in cost between legal and advisory,
yep,
because it was a small IPO, it wasn't substantial in size,
yep,
I would say it was around 15%
yep,
of the capital raise.
Yeah.
Yeah.
But what can I say? Well, my point, which I don't think you quite answered, are you happy to strip away all of the investor protections? Because many of the things that I've seen with ICOs basically do not have those investor protections built into them.
Were you able to see my presentation earlier?
No, I wasn't here earlier.
Oh, okay.
I apologize.
That's good, because if you had, then I'd be struggling.
But
that's good. Okay, no. So let me tell you what, and this isn't just a pitch for GBS, but let me tell you, we completely agree with you.
Yeah.
Right, so what keeps us awake at night? Investor protection and reputational risk, those sorts of things, right? Yeah. So we looked at the regs coming in here in January the 1st that our government's put in place. And then I
have read those, by the way.
Okay, the 9 principles. And then we looked at this explosion in terms of ICO issuance. And we took the view that it's the Wild West. Let's just cut to the chase. There are very few standards in terms of disclosure, in terms of transparency, making sure all the risks are properly articulated, making sure that investor protection mechanisms are in there. Okay, so there might necessarily be a security, maybe a utility, which has different types of rules. But our approach is to say the following. We want to have effectively a prospectus handbook, a set of listing rules, where the white paper has to reach this standard. And not only does it have to reach a standard, there has to have been, commercial due diligence, controller due diligence, technology due diligence, all the sort of stuff which you would look at if you were going...
I just briefly on, then I'll stop. Because
Go on.
Forever. So I've been to that process.
Right.
I've been to the verification process, and the more you improve that, the more cost you incur.
Right.
Right? It's not the listing cost that's expensive. It's the lawyers, it's the accountants, it's been properly audited, it's been properly verified, where every single section of your prospectus or white paper is fully verified. Those things do not exist in ICOs. And as you add them in, the cost will increase. But the reason why they exist was because all the scams perpetrated on investors historically.
Right.
That's why they came into being. Just as social arbitrage is occurring with Airbnb and other players, right? So, and I'm a big fan of innovation. I've looked at some white papers. I could churn out 50 of those white papers a year. They're basically university reports. I mean, I used to be involved in an incubator. We have 100 people who could write those, right? You know, AI distributed, global collaboration networks, utilitarian tokens that are not securities. Anyway, yeah. So
but I think...
But I've been asked to terminate my reasoning.
Actually, sorry,
if
can
you
I
had
just...
a question, just to kind of go straight to that.
Okay. It's all right, I was just going to respond.
Well, no, I think we need to answer the question.
You raise a very valid point.
Yeah.
And it's the point we've all individually addressed going through our thought processes, getting involved in this area. Is the ICO market unregulated currently globally? Yeah, this is it. This is the Petri dish. In Gibraltar, the regulators already announced there will begin to be a regulatory process for ICOs, initial token sales. The industry applaud that. There's a piece that I wrote on LinkedIn over the weekend as regards that. Now, having been a regulator for a long, long time, I agree in terms of the investor protection and all the other things that were built in over time within prospectus, listing rules, directives, market abuse directives, all the other things. But I also believe the way in which they have been built up has been elastoplast over elastoplast over elastoplast. You have had a crisis, the answer has been, we need more regulations, we need more regulators. We have a chance here to actually strip back and see exactly what we need to have. And I believe by doing so, in a way the European Union directive simply cannot do, too much legacy risk, too much vested interest. To go back and see, what do we mean by investor protection? What do we mean by a transparent, fair and trusting market? And build with modern technology, smart contracts and things like that. And I do genuinely believe, as someone who's CEO of a law firm, it's going to make the lawyers cheaper, it's going to make the accountants cheaper, and by God, if they're still around, it's going to make the bankers cheaper.
I just wanted to have a brief comment
On your point, I completely agree that the ICO market today is highly unregulated. What ICOs, or at least the more successful ICOs are doing, are trying to self-regulate. But one point that I don't necessarily agree with you is you're saying that including these safeguards or these requirements will increase cost, whereas I think you neglected the fact that distributed ledger technology, or DLT, can improve transparency and reporting without necessarily taking on all the necessary costs that are associated with day-to-day transactions. So for us, we've had applications for our pre-sale of about 50 million, we could accept only 3.2. So you can imagine how heartbreaking that is. But if you want to work with banks at the end of the day, or if you want to work with, let's say, regulated financial institutions, you have to self-regulate as much as possible before the, let's say, regulations come out. But for the cost aspect, I think it's very important to understand that, oh, this has become too loud. Blockchain technology allows for much cheaper access to transparency.
So we've probably got time just for one more quick question.
Sure. We seem to be comparing IPOs and ICOs here as if it's just a letter that's changed in between and some regulations. There's a rather huge point missing in that in an IPO you're buying shares in an actual company and you're buying share capital. Looking at the chart behind you, it looks like the IPO is finished as a quick and easy way to raise capital, and ICOs are storming ahead. I wonder if there's any thoughts on share capital invented in 1823 or something, and now, you know, certificates held by brokers take weeks to get. You know, could we connect shares to tokens? Do you think tokens will replace share capital to get us to a situation where ICO, IPO could actually be interchangeable, where you're actually buying shares in an actual company and not tokens, which have other benefits and advantages, which we've seen in other presentations.
So absolutely. We believe that for some companies, having their ownership 100% tokenized is what's right for them. That's what we're doing with our private equity fund. It is 100% owned by the token holders, and we actually have to earn our fees. And we think that it provides better transparency and liquidity. We actually disclose the NAV 3 times a day via third-party software that's fully available out in the open source community to review. So yes, we think that there will be fully tokenized ownership, and we think there'll be hybrid ownership, and that's really the future. And we think it's the biggest innovation since share ownership was invented, and the Dutch India company, and that whole innovation that allowed a whole new level of capitalism and global exploration.
Yeah, we think our biggest area of growth in the next 3 years at our exchange will be, as you just said, tokenized securities on the main market, which is share cap. Again, what we're seeing today is, how can I raise money and not dilute? Okay, I need to be a utility. So if I'm a utility, I can own 100% of my company, I can sell 30-40% via an ICO, I can keep back 30%, hope the token price will rocket, my reserve will go up 10 times, then I can feed some more into the market, and then I can go and do other wonderful things. I don't think that's the future. I don't. I think the ICO market that we're seeing will continue to grow, but I actually think, as I said earlier, I think it'll just go more mainstream, because at the moment, issuers are desperate not to be categorized as a security. And why is that? Well, because you have to produce a prospectus, and then you have to go to the regulator, and then you have to go through all that ball ache of basically getting ticks in boxes, i.e. the IPO that he's just been through on the LSE. We actually see that as the future, because actually what you're doing is you're going into a traditional capital market, but you're stripping away all of that infrastructure, which creates so much cost. So I see absolutely to have for example, GSX, if it's a private chain centralized exchange next year, where you can issue tokens 20% of your company, you're effectively doing a mini IPO, but you're being able to trade, settle, clear instantaneously with minimal costs. That's where we see as the most exciting thing. And maybe that will translate in the future to decentralized exchanges, but I think for us right now, we have to remain as a centralized exchange because there are no governance and rules out there, and that causes us some issues. But I completely agree with you. It'll be a share, absolutely, as a way of selling equity.
Okay, very, very quickly. I totally agree. IPOs will continue to exist. Debt will continue to exist on the market, but in the same way as AIM was created within the LSE structure, you need something that's going to cater for those that don't quite fit within the mainstream. What I would like to see, and I have not discussed this with my managing director, is in terms of the GSX evolution. GSX is an approved market, European approved market, is to look at whether we can have a slightly different regulatory, rule-based structure for tokens and security-based tokens than we have to have for pure equities. Now, currently, and I'm going to speak some heresy, bearing in mind that Gibraltar voted 96% to remain within the European Union, and I was one of those 96%, that the opportunities granted by Brexit to actually be slightly different from the European model when it comes to things like tokens, for which the directives were never intended, allows both the UK and indeed Gibraltar to give that flex to respond to the needs of the modern market. And it is very clear that investors and firms alike are turning to tokens, whether they are utility or security tokens, because they see them as an effective way of raising capital. Not the only way, but an effective way.
All right, I'll end on a very quick note. I think the best way to look at this is if you give traditional equities or traditional instruments, the transaction properties of digital currencies, that's where you can extract the most value. So cryptocurrencies today are the world's most efficient way of exchanging value, not necessarily the best way of storing value. So the same applies for equities. If you give those equities the transaction properties of crypto, that's when I think you'll see a lot of market efficiencies.
Great. Thank the panelists, and thank you for joining.